Why are they rich and wealthy? Are you wondering what steps the rich take to create wealth? This video will expose the exact steps the rich and wealthy take to stand out from the crowd and kiss poverty goodbye. Subscribe to the channel as we embark on this thrilling journey to simplify the steps the rich take to create wealth so that you can apply the same secrets to your wealth creation journey. Let's see 7 of these steps. First is living below their means. The wealthy often live well below their means, which allows them to save and invest more money. Many wealthy individuals have a secret to their financial success, living well below their means. This strategy isn't just about frugality. It's a powerful way to secure and grow their wealth. Firstly, by spending less than they earn, the wealthy can save and invest a significant portion of their income. This creates a snowball effect, as investments generate more money over time, leading to even greater wealth through the magic of compound interest. Imagine having the financial freedom to take advantage of lucrative investment opportunities without a second thought. Another advantage is the sense of financial security that comes with this lifestyle. With a substantial cushion of savings, the wealthy are prepared for emergencies, whether it's an unexpected medical bill or a sudden economic downturn. This safety net allows them to sleep peacefully at night, knowing they won't have to resort to high-interest loans or sell off valuable assets in a pinch. Moreover, living below their means reduces financial stress significantly. When expenses are kept in check, there's no need to worry about making ends meet every month. This stability fosters better mental and physical health and leads to more thoughtful financial decisions, free from the pressure of immediate financial obligations. By resisting lifestyle inflation, the wealthy maintain control over their finances. Instead of letting their spending habits balloon with their increasing income, they keep their expenses steady, allowing their savings to grow. This disciplined approach prevents them from falling into the trap of needing more money to maintain a more expensive lifestyle. This frugal mindset also enables them to make smart purchases. With money in reserve, they can afford to wait for the right opportunities, whether it's buying a stock at a low price or investing in a promising startup. They avoid high-interest debt and the stress that comes with it, giving them more freedom to make strategic financial decisions. Another benefit is the ability to be generous. Many wealthy individuals are passionate about philanthropy, and living below their means allows them to give generously without compromising their own financial stability. They can support causes they care about and make a positive impact on the world. Living below their means also fosters a long-term perspective on wealth. Wealthy individuals focus on future needs and goals rather than immediate gratification. This forward-thinking approach ensures they are always prepared for what lies ahead, whether it's funding their children's education or planning for retirement. Lastly, this lifestyle helps them build a lasting legacy. By being mindful of their spending, they ensure they have substantial assets to pass on to future generations or to support meaningful causes. They think about the legacy they want to leave behind, ensuring their wealth has a lasting impact. Take Warren Buffett, for example. Known for his frugality, he still lives in the same house he bought in 1958 and enjoys simple, inexpensive meals. Or Mark Zuckerberg, who, despite his immense wealth, often wears the same type of casual clothing and drives a modest car. These examples show that living below one's means is not about deprivation, but about making smart, intentional choices that lead to sustained financial success and freedom. Living well below their means is a cornerstone of financial success for many wealthy individuals. It's a strategic choice that enables them to save, invest, and grow their wealth while enjoying financial security, reduced stress, and the freedom to make meaningful contributions to the world. Next is investing with wisdom. The rich understand the importance of investing their money in stocks, real estate, and other assets that appreciate over time. The rich have unlocked the secret to multiplying their wealth, investing in assets that grow in value over time. They don't just stash their money away, they put it to work, letting it grow and compound in ways that passive saving can't achieve. Imagine your money as a team of little workers. Instead of letting them sit idle, the rich send these workers into the world of stocks, real estate, and other appreciating assets. In the stock market, their money gets busy buying shares of successful companies, reaping the benefits as these companies grow and profit. The power of compound interest kicks in, where the returns on investments generate their own returns, creating a snowball effect of wealth accumulation. Real estate is another favorite playground for the wealthy. They understand that land and properties often increase in value over time, especially in desirable locations. By investing in real estate, they not only benefit from the appreciation of property values, but also from rental income, which provides a steady cash flow. This dual advantage of capital growth and passive income makes real estate a compelling investment choice. But the savvy investor doesn't stop there. Diversifying their portfolio, the wealthy also explore other assets like bonds, art, precious metals, and even startups. Each investment serves a purpose, balancing risk and reward, ensuring that their wealth isn't tied to the fortunes of a single asset or market. Consider the world of venture capital, where the rich invest in innovative startups. It's a high-risk, high-reward game, but when it pays off, it can pay off big. By identifying and backing promising new ventures, they position themselves to reap massive rewards if these startups succeed. The rich also harness the power of tax-advantaged accounts and strategies to maximize their returns. They're adept at navigating the complexities of tax laws to minimize their liabilities and ensure that more of their money stays invested and working for them. Take, for instance, tech moguls like Elon Musk and Jeff Bezos. Their investments in their companies, as well as in other ventures, have led to exponential growth in their personal wealth. They didn't achieve this by keeping their money in a savings account, but by making strategic, calculated investments that have paid off immensely. In essence, the rich view money as a tool, not just a resource. They understand that by investing wisely, their money can work for them, growing and multiplying over time. It's about making strategic choices and having the foresight to invest in assets that appreciate, ensuring their wealth continues to expand. This mindset transforms their financial landscape, turning opportunities into wealth-building avenues and securing their financial future in the process. Next is focusing on long-term goals. The wealthy focus on long-term goals rather than short-term gains. Imagine two individuals standing at the base of a massive mountain. One is equipped with a camera, snapping quick photos and admiring the immediate beauty of the landscape. The other is focused on the summit, envisioning the breathtaking view from the top and preparing for the arduous climb ahead. While the first person enjoys instant gratification, the second person is investing time and effort for a far more rewarding experience. In the world of wealth and success, this mountain serves as a metaphor for long-term goals. The wealthy understand that the most rewarding achievements require patience, persistence, and vision. They set their sights on the summit, planning and strategizing their ascent, while others might be distracted by the allure of quick but fleeting pleasures at the base. Consider a farmer planting a tree that will bear fruit in 5 years. They meticulously tend to it, knowing that their labor won't yield immediate results. But when the tree matures, it provides abundant fruit year after year. This long-term investment contrasts sharply with someone who opts for a fast-growing crop that might provide a quick yield but exhausts the soil and offers no future returns. This principle also applies to financial investments. Imagine two investors. One buys trendy stocks that promise immediate gains but come with high risk and volatility. The other invests in blue-chip stocks, real estate, or other assets that grow steadily over time. The first investor might experience thrilling highs and devastating lows, while the second enjoys consistent growth and stability, leading to substantial wealth accumulation over the years. Next is being disciplined with their money. The rich are disciplined with their money, setting budgets and sticking to them. Imagine embarking on a grand journey across an ocean. The wealthy captain of the ship doesn't merely set sail aimlessly, hoping the currents will lead to a prosperous destination. Instead, they chart a precise course, plot waypoints, and constantly check on their bearings, ensuring the ship remains on track despite the unpredictable nature of the sea. In much the same way, the rich approach their finances with a disciplined mindset. They don't rely on luck or the whims of fortune. They set budgets and adhere to them rigorously, navigating their financial journey with calculated precision. Consider the tale of two artists. The first artist receives a significant sum of money and immediately indulges in luxurious materials, grand studio spaces, and extravagant parties to celebrate their newfound wealth. Soon the funds dwindle, and the artist is left with little to show for their initial windfall. The second artist, however, approaches the same sum with discipline. They allocate a portion for essential supplies, a fraction for marketing their work, and the rest is carefully saved or invested. Over time, this artist's prudent management of resources allows for sustainable growth and flourishing success. This concept also manifests in the realm of athletics. Picture two athletes training for a marathon. One runs sporadically, without a structured plan, driven by bursts of motivation that quickly wane. The other follows a strict training regimen, balancing workouts with rest and maintaining a consistent routine. On race day, the disciplined athlete's preparation pays off as they cross the finish line with energy to spare, while the other struggles to keep pace. The wealthy understand that financial discipline is the backbone of lasting success. They set budgets much like a gardener plans the layout of a garden, allocating resources wisely to ensure every plant thrives. They track their spending, identify areas to cut costs, and avoid the pitfalls of impulsive purchases. This disciplined approach allows their wealth to grow steadily and sustainably. Imagine a fortress with high walls and vigilant guards. The rich build such a fortress around their finances, protecting their wealth from the erosion of careless spending. They recognize that every dollar saved or wisely invested fortifies their financial future, much like each brick strengthens the fortress. By the way, if you are enjoying this video, give it a thumbs up. Next is taking risks with wisdom. The wealthy are not afraid to take calculated risks when it comes to investing or starting a business. Imagine a daring trapeze artist soaring through the air, leaping from one swing to another with confidence and skill. Each leap is not a reckless jump into the void, but a carefully timed maneuver, practiced and perfected. This is how the wealthy approach investing and entrepreneurship. Every move is a calculated risk, blending audacity with preparation. Picture two adventurers at a cliff's edge, faced with the choice of a straightforward path or a thrilling dive into the unknown. The first adventurer opts for the safe route, ensuring a predictable outcome but missing out on potential discoveries. The second adventurer, equipped with a parachute and a solid plan, takes the leap. The rush of the descent is exhilarating, and upon landing they find themselves in a lush, unexplored valley teeming with opportunities. This leap of faith, backed by preparation, exemplifies how the wealthy embrace calculated risks. Consider two gardeners in a vast, fertile land. One gardener plants only the safest, most familiar crops, knowing exactly what to expect but limiting the variety and potential yield. The other gardener experiments with diverse, exotic plants, carefully researching and nurturing each one. Some may fail, but many flourish, transforming their garden into a vibrant, bountiful paradise. This willingness to experiment and take risks results in a rich, diverse harvest. Think of a seasoned surfer facing a powerful wave. While many might hesitate, fearing the potential wipeout, the experienced surfer paddles out with determination. They've studied the wave patterns, honed their skills, and understand the risks. As they ride the crest of the wave, the thrill and rewards are unparalleled. The wealthy, like this surfer, are not deterred by the possibility of failure, but are driven by the potential for extraordinary success. Imagine two treasure hunters with maps of hidden riches. The first sticks to well-known trails, finding small but certain rewards. The second ventures into uncharted territories, facing challenges and uncertainties but armed with detailed maps, tools, and a spirit of adventure. Their journey is fraught with risks, but the potential for discovering vast treasures is far greater. This bold exploration, underpinned by careful planning, captures the essence of how the wealthy take calculated risks. In the realm of finance, two investors might approach opportunities differently. One sticks to conservative investments, ensuring safety but limiting growth. The other diversify their portfolio, investing in stocks, real estate, and startups. They research diligently, consult experts, and understand market trends. While not every investment succeeds, the overall strategy leads to substantial gains over time. Next is surrounding themselves with successful people. The rich understand the importance of surrounding themselves with successful people who can provide guidance and support. Hear this story. In a bustling city, a young entrepreneur named Jack dreamed of building a tech company that would revolutionize the industry. Jack had a brilliant idea and a lot of enthusiasm, but he quickly realized he lacked the experience and connections to turn his dream into a reality. One evening, Jack attended a high-profile networking event at a prestigious downtown hotel. He was nervous and unsure of himself, but he knew this was a chance to meet people who could help him. As he mingled through the crowd, he noticed a group of distinguished individuals engaged in an animated conversation. Among them was Mr. Harrison, a renowned tech mogul known for his savvy business acumen and successful ventures. Summoning his courage, Jack approached the group and introduced himself. To his surprise, Mr. Harrison welcomed him warmly and invited him to join their discussion. Over the next few hours, Jack listened intently as these seasoned professionals shared their insights and experiences. They talked about the challenges they had faced, the lessons they had learned, and the strategies they had employed to achieve success. Impressed by Jack's enthusiasm and the potential of his idea, Mr. Harrison offered to mentor him. He introduced Jack to other influential figures in the tech industry, including venture capitalists, marketing experts, and seasoned entrepreneurs. Each of these individuals brought their unique perspectives and expertise to the table, providing Jack with invaluable advice and support. Under the guidance of his new mentors, Jack refined his business plan, secured funding, and assembled a talented team. He learned the importance of networking, the value of diverse perspectives, and the power of collaboration. With each step, he grew more confident and capable. Years later, Jack's company became a leading player in the tech industry, known for its innovative solutions and dynamic work culture. Jack never forgot the lessons he had learned from his mentors. He too became a mentor, helping aspiring entrepreneurs navigate the complex world of business. Jack's success story was a testament to the importance of surrounding oneself with successful and knowledgeable individuals. It wasn't just about having a great idea. It was about having the right people to guide, challenge, and support you along the way. The rich understand this principle well, recognizing that the key to sustained success often lies in the company you keep. Next is being proactive. The wealthy are proactive in managing their finances, seeking out opportunities for growth, and making strategic decisions to increase their wealth. Listen to this story. In the vibrant city of San Francisco, there lived a young woman named Emily. Emily had always been diligent with her finances, but she often wondered how the wealthy managed to grow their wealth consistently. Determined to learn, she began researching and attending seminars on financial management. One day, Emily met Mr. Thompson, a well-known financier at a financial literacy workshop. Mr. Thompson was known for his sharp investment strategies and his proactive approach to managing wealth. Intrigued by his insights, Emily struck up a conversation with him, eager to learn more. Mr. Thompson shared a story about his own journey. In his early 20s, he had received a modest inheritance from his grandparents. Instead of spending it on luxuries, he decided to invest it wisely. He knew that the key to growing wealth was not just about earning more, but making strategic financial decisions. Mr. Thompson began by educating himself on various investment options. He read extensively, attended workshops, and sought advice from financial experts. He learned about stocks, bonds, real estate, and other investment vehicles. But most importantly, he learned the value of being proactive. He explained to Emily how he would meticulously analyze market trends, always on the lookout for opportunities that others might overlook. When the real estate market was in a slump, he bought properties at low prices, knowing they would appreciate over time. He diversified his portfolio to spread risk and increase potential returns. One of Mr. Thompson's most strategic moves was investing in technology startups during the early days of the digital revolution. He had a keen eye for spotting innovative companies with strong growth potential. While many of his peers were skeptical, he invested confidently, and several of those companies later became industry giants. Mr. Thompson also emphasized the importance of continuous learning and adapting to changing market conditions. He regularly reviewed his investment portfolio, making adjustments as needed. He wasn't afraid to take calculated risks, but he always did so with a thorough understanding of the potential outcomes. Inspired by Mr. Thompson's proactive approach, Emily decided to apply these principles to her own finances. She started by setting clear financial goals and creating a detailed plan to achieve them. She diversified her investments, kept herself informed about market trends, and sought advice from financial mentors. Over the years, Emily's proactive approach paid off. Her investments grew steadily, and she achieved financial independence. She realized that managing finances proactively was not just about making money, but about making informed, strategic decisions and seizing opportunities for growth. Emily's journey mirrored that of many wealthy individuals who understand the importance of being proactive in managing their finances. They don't wait for opportunities to come to them, they seek them out, make informed decisions, and continuously adapt their strategies to increase their wealth. This proactive mindset is what sets them apart and ensures their financial success. My dear friend, remember to seek professional advice before making financial decisions. I look forward to seeing you in our next video.